All right, let's dive right into a really interesting idea that's been making the rounds, coming from an analysis by Bitcoin University. The big question is this: could Bitcoin actually be in a secret bear market that's just hidden from view? It sounds a little crazy, but let's break it down.
So here's the puzzle that's got everyone scratching their heads. You look around and gold is just ripping higher. Stocks are hitting all-time highs, but Bitcoin, it's been stuck, just trading sideways for months now. It just doesn't add up with the whole everything rally we're seeing. So what's really going on here?
Well, analyst Nick Szabo has a really provocative theory. He's basically saying, yeah, Bitcoin is in a bear market, but you can't see it because it's being hidden or masked by what he calls the debasement trade. You know, that rush into hard assets when people realize their currency is losing value. To figure out if he's right, we first have to understand the mask itself.
And that mask, the thing hiding what's really happening, it's the slow, steady erosion of currencies like the US dollar. This whole concept is called monetary debasement, and honestly, it's the absolute key to understanding this entire theory.
So what exactly is monetary debasement? Well, simply put, it's your money losing its buying power. Every year, that dollar in your pocket just buys a little bit less. It's kind of like the other side of the inflation coin. Inflation is prices going up, debasement is the value of your money going down. And in our modern world, what's the main cause? You guessed it, central banks printing more and more money, which just waters down the value of all the money that's already out there.
The analysis uses this brilliant metaphor, and I think it's perfect. Think of the US dollar as a melting ice cube. Its value is constantly, quietly dripping away. And here's the really crucial part. The official government numbers, the CPI, they often play it down. They try to tell you it's just a slow drip, when in reality, it might feel a lot more like a steady stream.
And if you want a real-world example of that melting ice cube, forget the official stats for a second. The source points to something you can actually see and feel, the price of a Texas ribeye steak at one particular store. Since 2020, the price is up 72.5%. Wow, now that's a powerful sign of just how much purchasing power the dollar has lost.
You can see this play out perfectly when you stop measuring things in dollars and start measuring them in gold. Look at this. In 2025, gold has gotten stronger against the S&P 500, the NASDAQ, and even against Bitcoin. Whenever you see one asset rising against pretty much everything else, that's a huge clue that the measuring stick itself, the US dollar, is the thing that's actually shrinking. The dollar is the tide that's lifting all these boats.
Okay, so if the melting dollar is the mask, what's the face underneath? Well, according to this analysis, the dollar's weakness is actually hiding some very real internal problems that are putting a drag on Bitcoin right now.
Let's quickly run through these. First, there's some governance concerns. The analysis claims that the core software development for Bitcoin has become kind of centralized and a bit unpredictable. And that leads right to the second point, a higher risk of something called a soft fork. That's a software update that, if people disagree on it, could be messy and maybe even split the network. Third, it looks like that wave of companies buying Bitcoin for their treasuries is slowing down, with some of the companies that tried to copy MicroStrategy actually failing. And last but not least, there's just plain old history.
And that history shows a pretty clear pattern. For the last couple of cycles, Bitcoin's yearly price charts have had this rhythm: 3 green, 1 red. We saw 3 up years from 2019 to 2021, and what came next? The 2022 bear market. Well, guess what? We've just wrapped up another 3 green years. If that pattern holds, 2026 is setting up to be a red year. And you can bet that smart traders might already be getting ready for that possibility.
So let's put all the pieces together. On one hand, you've got this weakening dollar acting like a life raft, keeping Bitcoin's price from sinking. But on the other hand, you have these internal issues and historical cycles that are trying to pull it down. It creates a serious tug-of-war for investors. And this, of course, is the crucial question. If the market is this confusing with these huge forces pulling in opposite directions, how are you supposed to navigate it? Well, the analysis offers a very clear perspective on what to do.
The core argument here is that trying to time these cycles to jump in and out is basically a losing game. Why? Well, for a few big reasons. First, it's just pure speculation. Nobody, and I mean nobody, really knows what's going to happen. Second, it's super inefficient when it comes to taxes. You sell, you pay capital gains, and that means you have way less money to buy back in with. The market has to fall a ton just for you to break even. And finally, it's just incredibly stressful. The recommended path is way simpler. HODL. Just hold on for the long term, ride out the ups and downs, avoid those constant taxable events, and base your strategy on conviction, not guesswork.
And this quote really brings it all home. It's the final, crucial point that ties this whole thing together. The ultimate reason to be bullish on Bitcoin isn't about dodging some secret bear market. It's about that huge picture we started with, monetary debasement. If fiat currencies like the dollar are truly melting ice cubes that have no bottom, then an asset with a truly fixed supply, like Bitcoin, theoretically has no top. And that's a really powerful thought to end on, suggesting that maybe, just maybe, that long-term trend of debasement is the only signal that really matters.